You have some pretty powerful backing, which is also one of the criticisms of your new way of doing business here. Equifax, Experian, and TransUnion, those are the big three credit bureaus. Explain their role in my VantageScore.
Well, they give us strategic direction, and we have access to large amounts of data, anonymous data, and funding and capital. So we're going to be around for a long time. So there's an advantage there. However, we're very careful about antitrust issues. They cannot tell us what to do every day, and we're independently managed. So we create our own decisions and do our own model development.
Right. A lot of people might not know that when those credit bureaus have to deal with the FICO score, they're dealing with an independent company, Fair Isaac Company, a company that's done extremely well, by the way. Their stock is up like 500%, 6 times over in just the past 5 years. Are you effectively trying to end FICO's monopoly on my credit score? And why? What impact will this have on people trying to get a mortgage?
So to your first question about ending a monopoly, we want to compete. One of the reasons we started was to compete with FICO, but the market's large enough for both of us and for other market developers, score developers. And so we believe the competition, we come out with more products, more features, more benefits, and have the competition follow us.
You've said that you can open up mortgage lending to how many more millions of Americans, you think?
So we score about 40 million more people than the other commercially available models, and about 10 million of those are the 620 and above. And I picked the 620 because that's pretty much the minimum for a FHA loan.
So you're saying that you can expand access to 40 million people, and only 10 million of them are in traditional, like the credit-worthy cutoff.
At a 620.
Right.
And of those 10 million, about 2.4 million are African Americans and Latinos that cannot otherwise get a score. So not all those 10 million will probably be house ready or want to buy a house, but that we're talking about millions more that could qualify.
And the way you do this is by needing only about 4 weeks of activity, whereas FICO traditionally needs about 6 months to establish a credit score, and those kinds of innovations, right?
Correct. And as a former lender, you'd say, well, how can you create a score in 1 month's usage? So we tested that data with vast amounts of data, and guess what? The new scoreable score, their probability of default, which is what a score does, measure probability of default, is about the same as long-term borrowers. So it's an incredibly accurate score for this.
We're almost out of time, but why did they flip-flop? Because it looked like FHFA was actually going to make sure that the people couldn't use a VantageScore, and then all of a sudden, the last couple months, now they have to consider it.
Well, the new director is following the law, and we're very grateful to that. The former director was not following the law in his proposed rule.
Well, we'll see what impact it has as it's rolled out. I know it could take a couple of years. Barrett, thanks for joining me.
Thank you very much.
Barrett Burns is the CEO of VantageScore Solutions, which you'll be hearing a lot more about.